Hello, everyone, and welcome to this presentation of 2 trading techniques that you must have in 2014. Welcome and thank you for attending this presentation. My name is Steven Primo. I am the president and founder of Specialist Trading. And for those of you who are unfamiliar with our website, we are an educational company. I've been trading for roughly 37 years, and I teach all of the tips and techniques that I've accumulated in my 37 years, and hopefully we can elevate your trading. I know a lot of people had difficulty. We have many new members that have signed up with Specialist Trading in the past week or so, and they tell us of the challenging year they had trading the Forex markets in the past year in 2013. So I'm going to share with you 2 trading techniques that I personally use on a daily basis that we supply our students with, that we tell them that they should use these in their techniques and strategies. And I really think that they'll be able to elevate your trading in 2014, regardless of what strategy you're using or what technique. Now, before we begin, I ask that you please take a moment to view our disclaimer. We are required to show you this. I'm going to show you some performance results using these 2 techniques, but please remember that we can in no way guarantee that any of these results will be repeated in the future. So as you're taking a moment to view our disclaimer, I'd also like to mention for those of you that are new to my presentations, I see that we have a fairly large group here today. I'm a little bit different than other presenters. I like to teach more like a classroom. And what I'd like to do is make sure that you have a lot of questions to ask, but wait till the last 10 or 15 minutes. So after about 20 or 25 minutes when the class is over, I'll take questions. So if you have any questions or something doesn't make sense, many times if you wait for the next slide, you'll see that your question is answered. But if something doesn't make sense, just write it down, and I promise I'll get to it at the very end of today's class. And then as well, I will leave you with a phone number or an email address. So if you need to actually speak to someone or you'd like to email someone, you'd rather do that than ask a question here, you can do that personally, okay? So lots of ways to ask questions, but kindly wait till the very end. Now, in the beginning, I just want to wish everyone a very happy new year. We wish you all the best from all of us at Specialist Trading. We had a fantastic year in 2013. Our strategies now are traded, our Forex strategies are traded in over 60 countries around the world, and this is ranging from hedge fund managers to people that have just been trading for a few weeks. They're the same rules, the same strategies, no matter what your level is of trading, and everyone is, if you're following the same exact rules that we give you on a generic level, you've seen that in the past 3 years, one of our premier strategies is up over roughly 60% in just about 3 years. So we are just keeping a record of all the signals that we generate, but there are 1,000,001 ways to trade our methods, and so we can share with you and show you how to do that to personally fit all of these strategies to make and fit your needs for the new year. Now, as well, one of the things that we want to say is we want to thank FXstreetcom for creating this microsite for us. There's a link below. If you want more information about specialist trading or any of the strategies or things that we teach to our students, you can go to this link. And we've shortened it for you here in yellow on the bottom so it's not as long. There you can kindly just copy that down. And I'll repeat this at the very end of today's presentation so you can copy this link. And what it'll do is take you to the microsite, and you'll see all the information. You'll see all the strategies and different information we provide. If you want to purchase a course, you can click on a link and get a special discount provided through FXstreet, and you can hear and read about the course descriptions as well as learn a little bit more about myself in my bio. And then lastly, I want to just share with you and invite you all to join us on Twitter. We just started this the last month, and we've had a tremendous response just from not even advertising it. We just started, and just, I guess, word of mouth. We have a number of people following us. We share with you different signals that were posted for our members. In fact, last week we shared with you a really nice, a very nice signal to go long in the Canadian dollar that has worked out extremely well, and I'll talk about that later on today in today's class. So follow us on Twitter. That's at SPCLSTTRADG. Okay. That's our name, our hashtag. You can follow us there, and you can see if signals have been generated or if we're currently long or short at position in any Forex trades, as well as the stock market and the E-mini trades as well. Okay, once again, let's begin. But I just want to share with you that I know that many of you possibly are struggling. That's why you attend these presentations, to hear from different teachers, people that have been trading. And contrary to what a lot of you may think, I really struggled my first couple of years in trading as well. So if you're having a difficult time, I know what it's like. I know what it's like to not make ends meet, to put in a lot of work, to read a lot of things, to go to webinars or classes, or read a lot of information, and then not see any results. So I went through the same thing my first year or two of trading, and then finally I came in contact with some mentors on the floor of the Pacific Stock Exchange who were specialists who were able to turn my way of trading around. And they really told me that, Steve, the key to success is through consistency. It's not about hitting home runs. There were a number of traders on the floor who were millionaires in a matter of months, and they lost it all in a matter of days. So it doesn't matter really how much money you make. It's not about that. It's whether you can have this consistency so that you can trade 10, 20, 30, 40 years down the road. So that's really our goal. That's the specialist edge, and it's rooted in simplicity. I mean, once they taught me these different techniques and strategies, I couldn't realize how simple they were. It was just so amazing how they had maybe 3 or 5 rules, but how they were tremendously consistent. So that's what they taught me, and that's what turned my way of trading around. And that's what our goal is at Specialist Trading as an educational company first. Our goal is to teach you how to trade with this specialist edge. That's why we get so many comments from people who attend our webinars and have seen our videos through FX Street. They love our presentations because we always give you something that you can use, regardless if you decide to become a member of Specialist Trading or not. We always give you education that you can start using as early as today if you like, okay? But we always recommend people to paper trade first so that you understand the process. But every presentation we present here at FX Street, we give you a couple of really fine-tuned things that you can start using as early as today. So we're an educational company first, even though we provide you with strategies and signals and ways in which to trade. We're really more about teaching you how to become a part of the process so that you can, be trading, as we said, 10, 20, 30, 40 years down the road. Now, one of the first things my mentors taught me, they said, Steve, in order to be successful, you must always be in sync with whatever market you're trading. And I realized that I wasn't in sync. I was trading like 99.9% of all traders trade. I was trying to pick tops and bottoms. When I thought the market was way too high, or I read in some, we didn't have chat rooms or trading rooms back then, but we had like the newsletters. When someone said, no, it's gone up, this market has gone up too far, it's never been this high before, you've got to short it, I would short it. And I would do the same thing on the buy side. If it's gone far too low, I would say that, the indicators are way oversold. You've got to purchase it. And I'm sure many of you trade the same way. And it would work for a few times, and I would think, boy, I'm finally on the road here. And then it wouldn't work at all, and I would give everything back. So my mentor said, Steve, that, remember, we're looking for consistency. We don't want methods that work great until they stop working. We want something that has this nice 2-step forward, 1-step back approach. And the way you get that is through being in sync. Now, the only trouble is that it's very difficult and it's very troublesome for many traders to figure out how to be in sync because everyone has a different idea of what it means to be in sync with the market. But let's just kind of look at some examples here and see what most traders go through. For example, you can see this market here. We're in a sustained downward move, and then we start to move upward. So most traders, and myself included when I was trading this day, would say, well, you've got to buy around here on the bottom. It looks like we're going to be heading upward, so we've got to buy and try and catch the move up here before it goes too far up. And then look what would happen. It would go straight down. All right? Same thing works on the opposite side. You see a market go straight up. Perhaps some trading room or chat room you're in says, you've got to short this. It's hitting resistance. There's too much supply at this level, so you've got to sell. And look at this bar here. We close towards the low. So this is your point to sell before it comes all the way back down. So you jump in and sell, and then look what happens, okay? I'm sure this looks familiar to a lot of you. How could we alleviate this? How could we be in sync with the market when it's so difficult, when all these people are telling us, giving us different signals? There's too much supply. There's too much demand. There's a Fibonacci number here. There's, indicators are crossing over. Well, we came up with technique number 1, and this is something you've heard me speak about all the time. It is simply the buy-sell line. Now, if there were one tool, if I were stranded on a desert island and I could only trade with one tool, it would be this. And I use this in everything. It doesn't matter what market I'm trading. It doesn't matter what time frame I'm trading. And the buy-sell line is simply the 50-period simple moving average. So I want you all to plot a 50-period simple moving average on whatever market, whatever time frame you're looking at. So I don't care if it's a 5-minute time frame, a 4-hour time frame, or a daily time frame. You should always have a 50-period simple moving average plotted. And what you want to do is ask yourself, if price is above that 50 period, then you will only be looking to buy, or in other words, you'll only be looking for buy signals. You're not going to just simply buy at the market, but you need a buy setup, okay? Either, something that is in your strategy or one of ours, but you can only look to buy if price is above. And conversely, if price is below, you can only look to sell. It's that simple. Once my mentors taught me this, everything fell into place. I was no longer trying to pick tops and bottoms. I was in sync with the market. And I'm not going to tell you that this works 100% of the time, but remember, we're not, going for that. There is absolutely no indicator or method that works 100% of the time. We're looking for consistency. And there is tremendous consistency with using the 50-period simple moving average. So let's look back at those charts. Remember, we wanted to buy here because this particular chat room told us that, or the trading room said this is where you have to buy. It's going to bounce back up. And look what happened. Well, if we had added the 50-period simple moving average, we would have seen that price was below. And so if price is below, we have no business even buying anything. So you see how this would have kept you out of trouble. Now, on the other hand, we have this example right here where let's say there was someone told you there was so much supply at these levels right here. As you can see, there was 1, 2, 3 times we came into these levels. So there's tremendous supply there according to our technique or indicators. And, you always, never want to go in the face of supply, so you should sell right there. So you would have sold, and look what would have happened. What happened to the supply? Now, supply is subjective. Supply and demand is very subjective. So it's difficult. We want something that's more cut and dry, and the thing that is cut and dry is the 50-period simple moving average. So all you need to do is plot the 50-period simple moving average, and you would have seen that price is above, so you wouldn't have even thought or considered going short. You would have just only looked for buy signals. So you see what a great tool this is. As I stated, I use this every day. It's not, above my trading, even though I've been trading for nearly 40 years. This is something I continue to use and something that keeps me out of trouble and helps me be in sync. If you see here on a longer term chart, you can see the same thing happen. So if we're looking at a monthly chart, whatever market this is, we see that once price is above here, we're only looking to go long. And once we cross over and we go below it, we're only looking to go short. Okay? Remember, if you have any questions, I don't know if people came in late, please wait till the very end of class to ask questions. Okay? All right, so now let's look back at some Forex markets for last year, the best and some of the best and worst performers. So we're going to look at the Euro Yen, and we're also going to look at the Australian dollar and see how this technique number 1, could have helped you with these two particular markets. We're going to look at weekly charts just so that we can encompass the entire chart, okay? So we can go back entirely from the beginning of 2013 to the end of 2013. Now, the Euro Yen had performance results of 27%. From January to December. So that's great. I mean, this currency pair was up 27%, had a really nice and strong uptrend. Now, if we look at the chart here, we see that this is a weekly chart. Now, someone could have looked at this and said, well, we're going up, and it looks like we're curling over. So I think we're going to short it. Once again, there's some supply or some Fibonacci here that is resistance. So it's probably a good sell in the euro dollar in the first quarter of the year. So we should sell, but look what would have happened. Okay. So once again, you're out of sync. By trying to pick a top or a bottom, in this case a top, you would have been out of sync with the market. How could we have been in sync with the euro yen? For the entire year, we just simply add the 50-period simple moving average. And we see that price was above on this weekly time frame. So there's no way you would have lost money if you were looking at weekly charts, because you would have been in sync with the market. The only way you would have lost money is if you would have tried to short the euro yen. And if you use this simple tool, you will never have even considered shorting the euro yen. And so you've only had some very nice upward moves. How about the Australian dollar? Australian dollar was very poor performance this past year, down 22%. From January to December. If we look at the chart here, we see that in the beginning of the year, the first quarter, we kind of had no real movement. We're kind of just going in a range here. Someone could have said, we're going to decide to buy this. Maybe it's going to break out of this range, and you look like we hit a bottom right here. Someone else could have said, oh, that's some Fibonacci number. You've got to purchase it because it hit the Fibonacci support and all these, indicators lined up. So let's say in some chat room, they told you to go long, and then look what happened. So how could we have stayed out of trouble on a weekly chart using our technique? Well, we simply add the 50-period simple moving average, and we see here that we had a little, oscillating above and below. But once we were consistently below here, there was no reason you would have ever considered going long the Australian dollar, and you would have missed all of this downward move. Remember, once again, because You want to be in sync with the market. That will give you that consistency. And the reason why we use a 50-period simple moving average is because it transfers over well into all markets. A lot of people like to use a larger time frame, a 200-period moving average. Some people like to use a 20. Some people like to use a Fibonacci numbers 34. The main point is that the 50 seems to transfer over well regardless of what time frame. So that's why we use a 50-period simple moving average. If you're looking at a 5-minute time frame, a 4-hour time frame, or a monthly time frame, it seems to work the best as opposed to all the different time frames. And remember, all we're looking for is to see where price is in relation to that. It's not some magical trading tool that will tell us when to buy and when to sell. It's just getting us on the right side. That's all we're trying to do. So if price is above, we're looking for buy setups. If price is below, we're only looking for sell setups. All right, so that was technique number one. You can all start using that as early as you like. In fact, I suggest that you should start using it right away because you'll start to see this consistency in your trading. Remember, picking tops and picking bottoms is a recipe for disaster. Okay, I'll repeat it again. Picking tops and picking bottoms is a recipe for disaster. Take it from someone who knows. I lost about $500,000 in the crash of 1987 trying to pick a bottom. So I know personally how much that can work for just a limited time, but then how you can give it all back. So never try to pick a top or a bottom. It'll work maybe 9 times, but on the 10th time, you'll give it all back. Okay? So remember, it's a recipe for disaster. All right, so let's go on to technique number 2. So now that we know that what side of the market we should be on, we want to get confirmation. So we want to confirm when the right time is to enter. We want to use some type of tool that will fine-tune our entries. All right? So these are the rules for confirmation method. And remember, this is not a strategy. This was probably where most of my students have difficulty. They think the confirmation method or technique number 2 is a strategy or a system. It's only a entry tool. It's a tool to enter on that can fine-tune your entries. And so this is how it works. Regardless of what strategy you're using, it can be one of mine, it can be one of yours, it can be something that you got from another educator, or it can be something based on the tides of the ocean. It doesn't matter. But whenever your strategy gives you a buy signal, rather than just purchase at the market or place a limit below, trying to pick a bottom, after an entry signal has been given to go long, only buy once price trades 1 to 3 pips above the next consecutive bar. So in other words, as long as your strategy is telling you to go long, don't buy unless we trade above the previous bar. Okay? Same thing for sell signals. Whatever strategy is to go short, don't sell at the market. Don't try to pick a limit. After your strategy is giving you a sell signal, only enter or sell, I should say, once price trades 1 to 3 pips below the next consecutive bar. Okay? I know this may seem a little confusing or wordy, so let me show you some chart examples here. Let's say that this market, whatever it is, it doesn't matter. I purposely deleted it just to show you the concept because I want you to focus on this concept. Let's say you're in some trading room and they say, boy, we've got to buy this. It's taking off. It broke out of some resistance here, some, you want to call it a supply, whatever you want to call it. But it's taking off. You got to buy. So normally, what most people would do is they buy at the market because they don't want to miss it. But remember, our technique is that's okay. I mean, if the signal is valid to buy and we're above the 50-period simple moving average, instead of buying at the market, you only want to buy once price trades above. So if it does go above, you're not going to, lose that much money had you bought right here. Okay, so if you just want the confirmation that it's going higher, and as long as your strategy is telling you it's okay to buy, you continue to use this technique, and you'll track it down all the way. As you see here, we never traded above the previous bar's high until right here. This is where you would enter. Okay, now you'd enter at this point, and look what happens. You got confirmation, and that's when the trend resumed. Now, this technique, once again, is not a strategy. So we don't just want you to say, I'm going to just apply this to any bar, and once the bar trades above the previous bar, I'll go long. No, you have to have other sets of rules that make up a significant setup or a buy strategy. Okay, so this is not a system. It's not a strategy. It is just a technique to fine-tune your entry, to give you confirmation that once you've confirmed you've traded above, you're going to go higher. Even though this is not 100% guaranteed, once again, it's a great technique that you can start using as early as today, and you can use it on any strategy. It doesn't have to be one of mine, okay? So rather than purchasing right here, even if you had purchased right here, it would have been the right thing to do because ultimately the currency pair went up. But what happens with most people is they'll buy, and then look what happens. In the next day or two, it goes straight down. They get discouraged, they get scared, and they throw in the towel. Probably at the place where you should be getting ready to buy. So we want to just fine-tune our entry. Same thing would work if you go short. Okay, let's say the original sell signal was right here to sell. So you would sell right here, but we want to wait till it trades 1 to 3 pips below, as long as the signal is still valid. And this is where you get in right here, when it traded below the previous bar, and you see you have a much better entry. Okay? We're just trying to fine-tune our entry with this technique. So we've given you a great technique to get you on the right side with the 50-period simple moving average, and we've given you a great technique for entering. These two techniques, in my opinion, will substantially elevate your trading and get you on the road to consistency. But remember, we're talking about consistency. Nothing is 100% foolproof, regardless if you're listening to one of my presentations or someone else at FX Street. Nothing works all the time. In fact, many times you'll see that you'll have a perfect setup and then you'll enter and then you'll get stopped out. And you'll say, boy, I followed all of Steve's rules and I got stopped out with a loss and it didn't work well. So how can we fine-tune this even more? How can we, give ourselves even more of an edge? We've given ourselves a great edge with technique 1 and with technique 2, but is there a way to give us an even better edge? Now, let me just show you right here. Here's an example with the Canadian dollar. Now, price was below, and then we went above, and let's just say we got some type of signal to go long on this down bar right here. Let's say it was based off of the full moon. Now, it doesn't really matter, okay? But let's just say your strategy said this is where you buy. Rather than buy at the market right here, we want to place, as you can see here, had you purchased at the market, look what would have happened. You probably would have said, boy, what did I do? And then you would have been stopped out. So what we want to do is place the confirmation technique where as long as our strategy is still saying it's okay to be long, we just continue to track it until it trades above the previous bar's high where these dotted green arrow or lines are. And this is where it traded right here. So it doesn't matter that it has to close above. All it matters is that intra-bar it trades 1 to 3 pips higher. So that would be your entry point. And that's where you would have bought the Canadian dollar. This was earlier this past year. So this is a perfect example. Well, once again, as I was stating, these are great techniques to give you a greater edge. But how can we even elevate this even more? We've just given you 2 great techniques that you can start using right away. And I would recommend that you study them a bit and paper trade for a while. But I use them in all of my trading. It doesn't matter if I'm trading Forex or if I'm trading E-mini or stocks. All of our, I would say, 99% of all of our methods incorporate either one or both of these techniques at specialist trading. So I've given you this for free. That's usually reserved for our members. But one thing here I want to share with you is a way in which you can even elevate and increase your odds for success even more. Because, as I said, many times you'll use this particular technique and you'll still get stopped out. Let's say you would use this and let's say we never went higher and then we went lower. Okay, so is there a way to even give us a more of a confirmation, some way that we can elevate our chances for success even more with using these 2 techniques? Well, yes, I want to introduce and take just a short minute to talk about putting it all together with the PET-D. Now, what exactly is the PET-D? It's a proprietary color bar algorithm that is exclusive only to members at Spectral Trading. And what it is it shows you a series of green bars that tells you when a short-term uptrend is in place. And it shows you a series of red bars when a short-term downtrend is in place. Now, these are best world examples here when you see everything red or everything green. But from time to time, you'll have a splattering of red and a splattering of green in the overall trend. So here's what we want to share with you. A particular buy pattern is when you have an overall uptrend, meaning that price is above the 50-period simple moving average and you have a lot of green, from time to time, you'll see a splattering of red. So the very first green bar that occurs after a red bar is your confirmation for a buy pattern. So that's your setup bar, and then you'll buy if it trades above. So let me show you right here. As you see here, the overall trend is up, but now we have just a few red bars. Now the first green bar we have is our setup bar, okay? Now we apply the confirmation technique, meaning we'll purchase right here, and that's our buy. above the first green bar, and look what happens. Okay? Now, same thing works on the downside. If price is below the 50-period moving average, technique number 1, all right, what you want to do is the first red bar that occurs after a green bar is a confirmation for a sell. So, in other words, we don't see it right here, but we're below the 50-period simple moving average. The majority of bars are red, and then we have a small amount of green bars. The first red bar appears is our signal to go short, but we cannot go short at the market. We use technique number 2 that we just taught you. So we'll only go short if we trade right below here, which we did. That's your a signal to go short, and look what happened. Okay? All right, now let's look back at the worst and best performers of 2013, the euro, yen, and the Australian dollar. How could these 3 techniques have helped us? Well, we're above the 50-period simple moving average, as we shared with you before, okay? But what is our signal to go long and use technique number 2? Well, we simply add the pet D. You can see here the majority of green, but every once in a while we'll have a red bar followed by green. That's your signal to enter once we trade above the first green. And look at all these buy setups you could have had going long the euro yen on a weekly time frame. How about the Australian dollar, the weekly chart? Well, right here we got significantly below the 50 period, so we're looking to go short. As you see here, we add the pet D. We had one trade to go long here because we're above the 50, and this would have worked. I mean, actually, this was just 100 pips, so it's not really a bad move, but things changed, and now we're below the 50. We had our first red bar, and look what happened. You could have shorted and taken advantage of this. We had a splattering of little green bars, but the first red bar that appeared, that's your signal to enter, and look what would have happened again. Now, I want to share with you a signal that was given last week to our members in the Canadian dollar. This is the daily chart. We see here the 50-period price is above. That's technique number 1 we just taught you. Technique number 2, we're buying above the signal bar, and the signal bar was the first green bar that appeared, and that's right here. This was actually 100 pips to the upside. Here was another signal for about 50 pips, but this was the last one right here. Okay, we have a red bar followed by a green bar, so you would have entered on the 7th of January, and look what happened in the Canadian dollar. Okay, so we have technique number 1, we're above the 50 period. We have technique number 2, we used the confirmation method where we only bought once price traded 1 to 3 pips above. But then the thing we want to find out is, well, which is the bar to buy above? What is our setup bar? And that's where we use the pet D. And this is what we teach you in class. We teach you where to buy, where to place your stops, where to exit, and a multitude of different ways in which to trade it. Now, if you wanted to go to a different time frame, here's a 4-hour chart of the Canadian dollar. We see once again how the 50 period works in any direction and in any time frame. Here was the first green bar after a series of red bars, and we are above the 50. So you purchase 1 to 3 pips above, and then look what happened. This was on the 6th going into the 7th. So if you want to trade the smaller time frame, everything works the exact same way. You don't have to change. You don't have to worry about supply and demand, support and resistance, trading rooms, chat rooms. All of that stuff only serves to confuse you. It's too subjective. All you need to do is use the techniques we shared with you and then some simple tools like the pet D. All right, so let's recap. Technique number 1, the buy-sell line. What is it? It's the 50-period simple moving average. And why do we use the 50? Because it transfers over so well onto every market. In other words, you don't want to just use one moving average for intraday time frame, and then once you get to daily, you have to switch to another one, and then once you get to weekly or monthly chart, you have to use a different moving average. It's better just to use one that fits all markets and all time frames, and that's why we use the 50. It has worked better than any other time frame that we've seen. But remember, it's not a strategy. It's only a tool telling you what side to be on. So when we teach you this as an educational company, we're telling you that we are trying to get you to be on the right side by using this. And then we share technique number 2. That's the confirmation. Once you get a setup bar that's telling you, okay, all the pieces of the puzzle came together and it's time to go long, or all the pieces of the puzzle came together and it's time to go short, rather than just buy at the market or place a limit below, use the confirmation method. If you got a buy signal, regardless of what strategy you're using, only buy if price trades above the previous bar. And if you're going short, only go short if price trades 1 to 3 pips below the previous bar. Okay? So these are 2 great techniques that are usually reserved just for the members of Spectral Trading, but we share with you today as a service to all the people, all our attendees at FXstreet. Now, the last thing is, we say, well, Steve, I don't have a strategy. I don't have anything to know when to set up to go long or to go short. In other words, when all the pieces of the puzzle come together. That's why we use the PET-D. That's why the PET-D is such a great tool. We've only introduced this for the last couple of months, and we've had such a tremendous response. So if I could just take a couple of minutes to invite you to become members of Spectral Trading and purchase the PET-D course. We've only had it, as I said, for maybe 2.5 months, and we're already thinking of licensing this. So if you're interested in using this great color bar algorithm, you can really get a great discount, FX Street discount, $9.95 down from $12.95 before we probably license this on a quarterly basis. So it's we're really thinking of going in that direction because we have a lot of people in terms of businesses as well that are interested in using this color bar algorithm. In the strategy course, we give you 2 continuation trading techniques, we give you 2 pullback trading techniques, and a trailing stop technique. You're also going to apply this to any market or time frame, and you get my personal email address as well. So if you want more information, remember, once again, go to the microsite that FX Street has provided for us. Here's the abbreviated version in yellow at the very bottom. So you can go to the microsite and get more information about any of our strategies or the PET-D course, whatever one you're interested in or whatever one. Remember, we have people that have been trading for 50 years that use the same rules that have been people that have been trading for maybe 5 days. So nothing is too advanced or too below. We're just trying to trade with consistency. So here is the page we'll take you to once again. That will give you the course descriptions as well as tell you a little bit more about myself, and you will get more information along those lines. Okay, once again, here's the discount. This course usually runs for $12.95. All the FX Street people will be a discounted price of $9.95. But this is for a limited time only. Now, I promised you at the very last portion of today's class will be reserved for any questions. So I want to thank you if you happen to have any questions and for holding them. Now is the time. Remember, for more information about any of our discounts or strategies, you can go to our sister site, which is Pro Trader Strategies. They market and sell all of our individual programs. If you'd like to speak to someone, you can call us directly at 310-844-7220, or you can contact our VP of Operations, Brett Marsh. That's Brett M at specialisttrading.com. You can email him, and he can get to you right away or answer any questions that you may have. All right, let me just open up the question and answer box here, and just let me make sure that I can size it so that I can get all of your questions. Someone was asking, Alan was asking about the 50. I think, Alan, I explained that. Remember, the reason why the 50 is because we don't want to be using different tools or different indicators for different markets and time frames. It's better to use one that encompasses all. And we found in the past, I found in my 37 years of trading, that if you're able to use a tool or a strategy that works in all time frames and all markets and all different situations, that's something that will have consistency. You don't want to be changing the rules to mix and match with every market you trade in. So that's why we use the 50. It appears to work the best out of all of them altogether. I see here that some people are having difficulty with sound. I hope you were able to log back in and get much better. Someone was asking about the stop loss. Yes, we have stop losses and everything. In fact, we have roughly about 4 or 5 different techniques for stop loss, depending on if you're a conservative or aggressive trader, and we teach those in the course. I just can't give away everything. I've just given you 2 of the greatest techniques we have, technique 1 and 2, for members of specialist trading. I really think they can help you tremendously, and I can't give away everything, or it wouldn't be fair to the people that have spent thousands of dollars to purchase the course. So that comes with the course. Vandy Mullen was asking, the weekly Australian had a green bar by the first week as well. Yes, and I don't want to go back, but yes, they did. And some of the situations work better than others, but we're just trying to give you an overall feel of how it works and how it was. But yes, there was an overall buy and there was an overall sell. And remember, these are weekly bars because I'm trying to give you an example of how well it worked in that time frame for the entire year. But most people don't trade weekly bars. They trade daily or 4-hour charts or even hourly charts. So you'll see that this works just as well. I showed you the Canadian dollar, how it worked well on a 4-hour chart. Question is Canadian dollar still in a buy trend as per these techniques? Well, yes. Remember, the technique number 2 does not tell you about any trend. All it does is tell you when to get in. But according to the buy-sell line, the 50-period simple moving average, the overall trend should still be up because it's still above. Remember, plot that 50-period simple moving average and ask yourself, where is price in relation to that? If price is above, well, then you don't have to ask me. The overall trend is still up. So you're not going to try and short the Canadian dollar. Remember, I know this firsthand. Shorting, trying to pick tops and bottoms is a recipe for disaster. I cannot say that enough. I know firsthand because I would trade this way. And 9 times out of 10, it would be amazing. I thought, boy, I'm going to just be a millionaire in a matter of weeks. And then I would give everything back on my last trade. Everything. So it's a recipe for disaster. Think of all the times you've traded that way. Are you really successful? Is it really working? There are some people that are able to make a living off this. I know of some traders who do, but it's very difficult. It's very subjective. And they're looking at things that they can't teach. They pretty much have a feel. We're not about that. Remember, we're an educational company. And we're trying to teach people how to use things that are consistent. I wouldn't be a good educator if I said, well, I just feel that we're at a top here. How can I, explain that to my students? It's something that you have to be able to teach through looking at techniques or patterns or indicators, and that's what we do. But we keep it extremely simple. As I said, most of our strategies have maybe 5 rules at the very most. So just use the 50 and ask yourself, where is price in relation to the 50? If price is above, the overall trend is up. And you should only be looking for buy setups. If price is below, the overall situation is down, the overall trend is down, you should only be looking for sell setups. It's that simple. It doesn't get much simpler than that. Let me look at some more questions here. Let me see. Not in stocks necessarily, but in Forex trading, how do you handle each data release and news? Hi, Boyke is asking, how do we handle the data releases and news? We don't even look at data or news. Okay, once again, all news is subjective. Okay, I'm going to repeat that again. All news is subjective. So one person can look at some economic report and say that's bullish and buy. Another one can look and say it's negative and sell. You only find out until days later. We've, in one of our best strategies, strategy number 5, we have roughly about 65% gains in the last 3 years by taking each and every signal, regardless if it fell on the day of a news item or not. It doesn't matter. We just follow the rules. Most of the time, what we have for a buy or sell setup is already built in. So it doesn't matter what the news is going to be. So we share with you all the ways in which to trade them. We tell you where to place your stop. So if it doesn't work out, you have a minor loss and you go back and look for another setup. So we don't look at news. Now, having said that, we have a number of people that have just been brainwashed and conditioned to follow and track the news, and they get very frightened trading before a news event. So if that's the way you feel, then we simply say don't trade, don't take the signal. There's no rule that says you have to take each and every signal. There will only be that in effect if you were trading a system, which means that you have to trade the same way each and every time. But we are an educational company. We do not teach and market systems. We teach and market strategies, which are roughly 65 to 75% rule-based, but we give you 25% leeway for discretion. So you can say, I don't want to take this, or I want to trade it more conservatively, or I'll trade it more aggressively. I'll use this particular exit. I'll use this particular stop. Different ways in which to trade, and we teach you this in our course. Okay, we want you to become a part of the process. I think one of the reasons why so many traders lose money is because they take themselves out of the game. They come to these presentations, or they read the books, or they go into chat rooms or trading rooms, and they say, well, this person must know what he's doing, so I'll just mirror and do whatever they do. I couldn't be more against that. I don't want anyone to mirror and take my exact same signals. I want you to become a part of the process and find out whether you want to take it or not. If you feel too afraid to take a trade, don't take it, whereas I may take it. If you want to get out at a certain exit level, feel free to. You don't have to get out at the same exit level that I'm taking. Okay? So I want you to become part of the process, and this is what we teach you. I think that's the only way in which you can become an independent and successful trader, is by learning how to trade to your needs, not to someone in some trading room or someone telling you where the limits are and where you should exit and where you should. It doesn't work that way. Okay? How important do you view the 200 and the 20 moving average? Well, the 200 is great for longer term. Okay? So I only would look at the 200 if I were looking at maybe a monthly chart. All right? It absolutely holds no significance if I'm looking at a 5-minute chart, okay? And a 20-period moving average is great if I'm looking at a 5 or an hourly chart, but it holds no significance if I'm looking at a weekly or a monthly chart. That's why the 50 is so great. It encompasses all these time frames. So that's why, we don't want to change each and every moving average for each and every chart. We just want to keep one, and that's the only moving average I have on my charts. That's the 50 period. I don't look at anything else, okay? How do you interpret 1 to 5 pips for the Indian market where it is in rupees? I am trading the Indian market. Well, in other words, it just means that the increment, okay? Whatever the increment is in rupees, whatever it is, if you're looking at E-mini chart, it's 1 tick, which would be 25 cents per tick. If you're looking at, stocks, it's one tick, 1 cent. It just means one increment, okay? So that's whatever the increment is, regardless of the market. So it can be 1 to 3 increments, all right? If you have 100 increments per point, okay, so just would be 1, all right? If you have 4 per point, it would be, just one of those, which would equal, 25%. Just look at it in terms of increments. Does this work with the stock market? Yes, it does. We have courses in the stock market where I teach these exact same techniques in almost the same class, but I use stock examples showing how these same techniques work. So once again, you'll find that consistency in a method it should work in every market and every time frame. It shouldn't work like, well, it only works for the Forex, but it doesn't really work in stock. That to me is not something that has stood the test of time. But these things I'm teaching you today were taught to me roughly 35 years ago. So these are things that turn my trading around and that I continue to use on a daily basis. Let me get to some more people here. Can you show us the PET-D on the 1 hour EURUSD? Well, I don't have the ability to access live charts right now. I'm showing you things that are on a presentation that are currently on a PowerPoint. So it's not live, it's static. But if you call us or contact one of our consultants, trading consultants, I'm sure they can help you, or you can give us a call or send us an email. But we don't have that ability right now because this is just a static PowerPoint presentation. Let's say price is below the 50-period simple moving average on a 1 hour, okay, the time frame you want to trade. But price is above the 50 on a daily. Very good question, Hugo. This is probably asked me by every student that joins on. I personally, and I'll state this over and over again, I have seen no consistency in trading the smaller time frame based off of the larger one, okay? I'll say that again because I know a lot of you attend these presentations and they always say you should look at the larger time frame first, and that way you can determine what the small one should be. I have found in my 37 years, my mentors taught me the same thing, there is no consistency in this. Now, having said that, we have a number of traders at Specialist Trading who swear by this. So that's fine. If you want to do that and you want to say, well, price is above on the larger time frame, so I can only go long on the smaller, that's fine. You would not be in any way altering any rules. You would still be in sync with the method. But I have found that using this techniques only takes me out of a lot of trade because I can't take the setup and I'll miss a trade because it wasn't in sync with the higher. So I personally only trade the chart I'm looking at. If I'm looking at an hourly time frame, I only care about what the 50 is in relationship to that hourly chart. I don't care what it looks like on the daily. I don't care what it looks like on the weekly. Okay? That's my personal choice. Once again, I would never tell any of my students or members to trade that way. Trading is a process that has to meet your personality. So if your personality likes that confirmation of a higher time frame, then that's great. Okay? There's nothing wrong with that. But once again, trading is personal. You can never take the same signal someone else would. It just won't work. I've seen it in my trading. I've seen it in my mentoring. It doesn't work that way. You have to meet your own needs. So my personal needs are it doesn't work. There's no consistency in it. Would I tell one of my students not to trade that way? No. We have many students who swear by it, who continue to use the higher time frame to determine what the lower one is. Okay? So I hope that answers your question. Let's see here. When the price trades 1 to 5 pips from the confirmation bar and it goes down, and if we are in a buy, then what do we do? Well, if it goes down and you use one of our stop placements, you'll get out with a minor loss. Okay? As I stated, we're about teaching you consistency. And consistency is, the definition is basically 2 steps forward, 1 step back. So that one step back means that you're going to lose every once in a while, but we keep our losses to a minimum. And then in the next trade, hopefully, you'll get a nice winner that will take out that loss and make you even more. We're not going to sit here and promise you that every trade is 100%. It doesn't work that way. I've learned that in my trading. It doesn't work that way. You're going to have to take some losses. You just try to keep them to a minimum, and it's an over time, it's a numbers game. Where that, as we said, one of our best strategies is up over 60% just by doing these, taking these signals generically, and, just taking each one regardless of news comes out, regardless of, where the higher time frame is. And if you would have taken just these basic ones, you'd be up over 60% in your trading account. Now, we're not saying you have to trade this way. It's just we provide our members with the generic signal so they can decide if they want to trade that or trade something that's more akin to their personality. Okay? We have just a few more minutes here, and I want to just really stress that if you're really considering taking your trading to the next level, I know some of you have struggled in 2013. I strongly suggest that you become members of Spectral Trading. As you can see, my devotion to trying to teach you. We're not about just trying to sell you something and say, thanks, you're on your own, we'll see you later. You see how important it is to me to teach you how to use these things. If it weren't, I wouldn't give away something free each time we have a presentation. I always give you a technique so that you can elevate your trading. So that's where my heart is. I want to make sure that you can, take your trading to the next edge so that hopefully you can trade 20, 30, 40 years down the road, the way my mentors taught me. So the whole thing is we're an educational company. We teach you how to fine-tune these methods to fit your needs so that you can ultimately say, thank you so much for the mentoring, thank you so much for the education, but I'm able to do all my own now. I don't need to rely on anybody. I don't need to subscribe to all these trading rooms. I don't need to have all these multitude of indicators on my screen. I don't need to be waiting for every news event so I can decide whether I should trade or not. You're free and you're independent. We've empowered you. So you don't have to be spending all this money and time and energy looking for the answers because you'll have the answers. That's what we're trying to teach all of our people, okay? So we have strategies that are based off candlesticks. We have strategies that are based off patterns. We have strategies that are based off technical indicators. But I wouldn't say that we're 100% technical because we give you 25% room for discretion. And so discretion is something that basically is just your own feel. It's something you have an insight into the market just from trading for a long time or from getting my education, the things that I've accumulated in 37 years. What I want to do is shorten your learning curve. I don't want to have you trade for 37 years so that you get to the point where I am. I'd hopefully like to teach you all of this in a matter of weeks or months so that you can ultimately go on your own. Okay? Lastly, someone is saying here, Steve, engulfing bars, 75% body bars, correct way to use the RSI when you use still also. Ben, this is going into another strategy about engulfing bars, but basically we look for engulfing bars the same way. Any type of engulfing bar and pattern that you would find, you must only use the buy setups for engulfing patterns if they're above the 50-period simple moving average, okay? See, most people lose with engulfing patterns because they're trying to pick a bottom. They see a bullish engulfing pattern that's below the 50-period simple moving average. And they try to short the market. They see a bearish engulfing pattern that's above the 50-period. Remember, use technique number one. Only go short if price is below that moving average. Only go long if price is above. This is regardless of what technique or candlestick bar or whatever you're using. Even if you want to look at supply and demand or things of that nature, use the 50 to tell you what signal to take. Okay? If I can share with you one thing that has helped my trading tremendously, it would be technique one, and then secondly, technique number two. Okay? As I stated, I use all the things that I teach. It wouldn't be right for me to tell you that I use it in my personal trading. As soon as I end this presentation, I will go back to trading. So I want to thank you so much for joining us. Remember, if you want to take your trading to the next level, you can use the two techniques I shared with you. And if you really want to get to that road to consistency, please, I suggest become a member of Specialist Trading and purchase the Pet D before we increase the price, and we have to market it every 4 months. So you have a lifetime locked-in guarantee. You have my personal email address. And I will be there with you every step of the way. Okay? Thank you so much. I want to wish you all a happy new year. Hope to see you on Twitter. And thank all the people at FX Street for giving us the opportunity to speak. Okay? This will conclude this presentation. I'll see you next month with a brand new presentation, more information, more techniques to trade with. Goodbye.